So we're going to start out looking at the correlation right now between the momentum-based uh, octopus trader that we've got here, the double profit, combined with algo bands. Now, again, the algorithm bands, these are, for those of you who need a refresher on these are very important bands. What it's doing automatically is measuring what the institutions are doing when their algorithms are kicking in, and not only designating when that happens, but giving a nice tradable band. So we've had that for a while, quite a while. A lot of you have been using it just on your own or in combination with other indicators. But I'm going to show how to use this in combination with that octopus as well. So again, a couple things I want to point out. When we're using the algo band indicator, that's the HPT6 algo bands, you've got the choice between automatic and manual. Automatic means it's going back and looking at the last 12 days and determining what the best levels were for the algorithms for the institutions for that market. You also have a manual, and that is you can click this off and then use the number. It could be 15, 17, 19. The smaller the number, the more that you're going to get. And for some of you, you've had better, you've got much better bands forming that you trade. So this is an element that you can work with. For right now, I'm just going to use the automatic. Okay, and then in addition to that, what we're doing is we're using the double profit 2A. That's this one. So there's an easy way to trade this. It will basically filter out most of the trade signals and then allow you the ability to get really good trade entries. You're going to miss a trade every once in a while because of this, but you're going to get some nice big movements. So let's use this as an example. This was pre-market right here. And on the pre-market, what we had was a 613. At 613, we had an algo band that formed right here. All right, the first thing I do is I want to look to the left and see what was my last octopus signal that I can take. Okay, the last octopus signal that we had was long over here. So that means that once I close above this band, I can take a long trade, a long position, because I already got clearance over here. That's the first way to trade it. And then the second is, if you were to get an arrow the opposite way. In other words, once we came into the band and got an arrow the opposite way, then we're able to take that trade as well. So that was not the case though. We had a close above here. That was it. All right. And then of course, we had a close above here. Once we entered the band again, which was right here, all right, we'd be looking at a short trade or a long trade, depending on whether we close above or below. Okay, notice we had octopus signals here, but we did not close below the band. Okay, so none of these from here all the way out to here, even though we were getting signals in a kind of a sideways chop market, we're not taking any trade because we did not close below the band. And then notice what happened off of this signal. Once we got this one, that's okay to take because we were what? We were above the band. All right, so we're good to stay above the band. All right, that was your trade. The nice thing about this is you're going to try to hold on to a nice runner, and there's no trades that are taking place in here. All right, no trades at all taking place in here. You're just holding on to a runner. Now, some of you kind of amend this a little bit, and that is that you can do add-ons in the direction of the trade. So in other words, once we closed above the band here with this, then this was an add-on trade here. This was one that didn't work out, and then you had an add-on here, and here. That's a more aggressive trade setup. You're going to get more trades that way. You're going to have to manage them more. But for some of you, that's a more palatable approach. But this was your trade here. I don't know if we've got any more. Let's go take a look here at NASDAQ. We'll continue. Of course, now what I mentioned was you do miss these trades, okay? You're going to miss all of these trades in here because you're using the algo band. If you're using the aggressive method again, these were your long trades to take. And then notice once we got the signal here, again, if you're using the algo band, you're not acting on this, okay? What we are looking at though is once we got into the band, we look back to the left. Was our last trade entry a long or short? It was short. So when we close below the band, it's a short trade. All right, we close below the band, it's a short trade. And then again, if you're aggressive, you had a series of short trades here. Notice we're not looking at any long trades here or here because we're not above the algo band. Okay. We had the next algo band here. So we look back to the left. The last trade we had to the left using this was long. So any close above the band is a long entry. Once we got here, we did have a short entry. This one just got caught, just got nipped right here, and it would have gotten stopped out. Okay. Your next short entry would have been here. And actually, we were in the room, I think, at this time. And if I recall correctly, what I said was if this was the trade entry, you can place a very tight stop right here because you don't want it if it comes back. But here's an example, short here. And if you didn't do that short here where you did get caught twice. But then the good news is you got the nice trade to the downside here, short, that more than made up for it. And then continuing on this analysis, we moved up, we went into the band, we looked back to the left to see what is our trade setup last. It was long, so it could be long through the band here, another long entry here, and then as we came back into the band, we looked to the left. Last trade was a short, so a close below here short. If some of you were aggressive traders, you got the trades off this way. Okay. As we continued, we had a lot of activity here in NASDAQ today. We had another algo band here. Now at this point in time, we would look back to the left. What was our last entry? It was down, it was short. So if we got a close below the band, we would have short. If we do get a reversing, not a reversing, but another arrow the opposite way, which this was, then once we close above the band, we're long. Okay, and so you got the nice run up to the upside, going up, making new highs on the session. And then we have another one over here. Same analysis, we look back to the left. We didn't close below, and then we can take this one long. Once we got to the band again, we look back to the left. The previous was short. We closed below, it's short. We came back up into the band again. All right. You can look back to the left. What was our last trade? Short. You got caught right here. And that happens in trading sometimes. That's why you're going to use a tight stop, but then you more than make up for it on the long trade here. And I think that pretty much brings us into where we're at right now. Yeah, it does. Now notice also on these bands, the way this one is set, it's going to actually produce the shading for 60 minutes, but it'll continue to draw where it was through here. So this is still valid. If we were to come back down, whoops, if we were to come back down through here again, and we have not had a new algo band, then we would do the same thing. We would look back to the left to see what our last trade was, and or take the first arrow trade that occurred either closing above or closing below the algo band. All right. Now, I'm going to stop with this analysis and see if there's any questions. You want to look at the Russell, Marcel? Is that your question? Or is that your comment? You want to look at the Russell contract? Okay. All right. So let me change. I'm going to go ahead and change charts. Okay, here's our Russell chart. Now let's go ahead and take a look here. Let's take a look near the pit open. We'll start looking here at 6 a.m. to see what we have. All right. So here's our 6 a.m. At this point, we do have an algo band here. If we look back to the left, our first trade that we had going in that direction was a long, so this would have been a long trade. That did not work and got stopped out. Okay. Moving into the pit open. Here's our pit open right here. Right, we're moving back into it. We're moving back into the band. So once we hit the band, we have a potential long trade entry here, but if you're trading the conservative method, it's going to be a long entry here. Okay, and then again, if you're placing a stop on the other side, your stop out is here. So this is a pretty good indication as we went through some chop here. Okay, not every trade is going to work out, and this was a little bit of a frustrating setup here because again, you would have had another trade entry here that didn't work, but then a short trade here, a long trade here for a scalp, and then you got the nice short trade to the downside. So right in this area in the first basically 20 minutes or so, you would have had a little hard going in here, and you would have been down for about the first 10 or 15 minutes on a couple of trades. But that's how you would handle that. Now, as we continue on, as things do in these markets, they tend to balance out. And you've seen that when you get into trading, sometimes you're going to get a little rough patch of maybe 2 or 3 trades. That one was kind of a rough patch back there. But then you'll generally find that things smooth out and you're back on track again. And that's the nice thing about this approach. So a little bit later on, around, what was that, around 7:14, 7:15 Pacific time, we had another algo band. If we look back to the left, what we had was a long setup, and therefore this was your trade coming through here to the long side. Okay, trade coming through to the long side. You can continue to take these trades long and long. You normally would have had a short trade set up here. However, we didn't close below the band. Okay, so that's the nice thing. The algo bands in conjunction with the double profit act as a kind of a check and balance system for filtering, and is only trying to get you the strongest trades in the strongest directions. Okay, so no short trade here, but then a nice long trade here. Because what you do, if you can't take, once we enter here, if you can't take this arrow trade because you're not closing, then you're going to take the opposite one, which is right here. As we move further along, okay, you did have a short trade setup here, but again, if you're just using the algo band as your trade, once we entered the band, we look back to the left, the trade was short. We're going to go short through here. And then as we came back up through it, a long trade through here. And that one was a home run. Moving back further, we had another algo band here around 9 o'clock. We look back to the left, the previous trade was short. Therefore, we're waiting on a close below the band, and that was it right here. That was the short entry, and then this one actually confirmed it. As we continued to go, we entered the band. If we would have broken below the band, it would have been short. We don't go long above the band unless and until we get a long entry, because if we look back to the left, our previous trade was short, and we did get a long entry here. And that brings us to where we're at right now. So here in real time, as we're looking at the Russell in real time, we have an algo band here. Our previous trade was short. So what we're looking at would be a short trade on a close below here. Or if we get an up arrow and we're above the band, it's going to be a long. And that's where we're at in real time right now on the Russell. So let me stop and see if there's any questions on this. So let's take a look at the 6E contract here, and we can do this some analysis, and maybe depending on what it's showing, I want to show something here, if in fact it produces that, and I don't know yet until we do it. So bear with me a second while I make this change. All right, here is the 6E contract now. We'll take a look here. Here was an algo band that formed at 6:43 my time. If we look back to the left, the previous trade was down. So well, I stand corrected. This is the algo band here. This one formed at the same place that this one did, so that's why it didn't make any sense. It actually entered the band here at 6:41. So at this point, we're looking back to the left. This was the down arrow, so we're looking at once we close below the band, that was a good trade. What this is pointing out is even though this isn't shaded, this is still a valid algo band where it drew the lines in between. It just stopped the shading after 60 minutes. But that is the trade short through here. That trade produced a very nice move. We got over to here. Okay, we had our next algo band that drew at 8:11. If we look back to the left, our previous trade entry was long. So we had a long trade entry here, right? This was not a short entry here because we have not gotten an opposite arrow, but then notice this was. Okay, so once we got this trade entry right here, then we had our short trade. And this is nitpicking a little bit, but notice when we came back up into the algo band again, it stopped shading, but it still was here. If we look back to the left, our last trade entry using this was short. So again, it's a short entry on a close, and that's where we're at right now. Okay, so this gave me the ability to take to look at this algo band when it stopped shading, but it's still drawing. All right. I want to thank everybody for coming and watching, and we'll see a lot of you again tomorrow. Remember, tomorrow, I don't think we've got a crude oil inventory again tomorrow because of the holidays, so I'm pretty sure that's going to be delayed till Thursday again. We'll verify that in the morning, but I'm almost positive of that. All right, I hope this helped. Take care, everybody. Have a nice day. We'll see everybody tomorrow. bright and early. All right. Bye now. Bye-bye.